Hi everyone, this is Gary, and we're going to be looking at our assignment for week 4. And we have the templates in front of us, and what I just want to go over some things that I wanted to point out to you to help make this week a little bit easier for you and help you to understand. So what we're doing now is we're doing the last step in the accounting cycle, and that's called closing, the closing entries that we'll be doing. So up until now, what we've done just last week was we did the adjusting entries. So what we find in P4-27 is that we're given the adjusted trial balance. So our adjusting entries have been made and we have a trial balance. And all we're going to be doing in these first requirements is really just transferring the numbers from the adjusted trial balance over to each particular statement. So for instance, we have here the income statement, and you're going to be just pulling in the revenue and all the different expenses, and that's going to come directly from the adjusted trial balance that's given to you. And you're going to figure out what in this particular case, is going to be a net loss. There's not going to be a profit, there's going to be a loss. So that's requirement 1. Requirement 2, that we're then going to create our statement of owner's equity. Now, we want to start with the capital as of July 1, 2013. And that's the capital that's listed on the adjusted trial balance. So you simply put in that particular information. Then any contributions you're going to be putting in here. You're going to put a net loss for the year that's going to come from the previous requirement 1, the income statement, and then any withdrawals that are noted in the adjusted trial balance. And then you're going to come up, that's going to bring you to an ending capital for the year, June 30th, 2014. The next requirement is to build your balance sheet. And again, these items are going to come directly from the adjusted trial balance. Now, what I do want to point out here is that if you notice here, you have the building, and then you're going to be subtracting accumulated depreciation in order to come up with so you're going to have the building value from the adjusted trial balance. You're going to subtract the accumulated depreciation, and that's going to give you, excuse me, a new value for the building. So just don't forget to subtract this amount. It's not going to do it automatically for you, so you have to subtract the accumulated depreciation. Remember that your assets are going to have to equal your liability and your owner's equity. The next requirement is the closing entries. The closing entries are always the same. So we're going to be doing the same thing in 427 as we do in the next problem, CP 439. And basically what that consists of is 4 different items, 4 different journal entries that you're going to have to make. And what we do in the closing entries is that we're closing out what's called temporary accounts. Now, our temporary accounts are revenue, expenses, and any withdrawals that are made. So we have to close those out to the capital account, because remember that our net income or loss feeds into the capital account, as well as any withdrawals that are made by the owner. So your first closing entry is going to be to close out the revenue. What we do is we close them out to a temporary account called income summary. So you're going to take your revenue that's on your adjusted trial balance and you're going to close it out to the income summary. Then you're going to close out the expenses to the income summary as well. That's going to be your second entry. So now we have the revenue and the expenses in our closing entries, and the third entry is going to be to close out the income summary to the capital account, because we're going to take the net effect of the revenue and the expenses, be it a profit or a loss, and we're going to close out that income summary to capital. So you're going to be closing out either the profit or the loss in this third item. You're going to close out that income summary to capital. And the balance that's in that income summary is going to be either your profit or your loss, depending on the situation. And then the final journal entry for closing entries is to close out the withdrawals to capital as well. So remember, what we're basically doing is feeding the net profit or loss and the withdrawals into the capital account. So again, just to go over the first item, we're going to close out the revenue account to income summary. Second entry, we're going to close out the expenses to income summary. Third entry, we're going to close out either the profit or the loss that's in income summary to the capital account. And then we're going to close out the withdrawals to the capital account. There's a good example of this in the textbook, and the closing entries are the same for each of these problems, not the same amounts obviously, but it's the same process, and it's just consists of those 4 transactions. And then we're going to do our T accounts, and we're going to fill in any of those balances that we have there, so we have a completed T account. And then we're going to do what's called a post-closing trial balance. Now, if you notice, this is different because you don't see any of your revenue, expenses, or your withdrawals, and the reason for that is because we've closed it out to the capital account. So the post-closing trial balance will be rid of all of those temporary accounts such as revenue, expenses, and withdrawals. The next problem, CP 439, starts off with a requirement 1, which is optional. This is a worksheet that you can fill out, and even though I don't grade it, I would recommend that you fill it out because it's going to be useful for you and make it easier for you to actually do the remaining requirements. So it's not required, but it's strongly recommended that you do that. And then we're going to do the same thing. You're going to take those balances, you're going to do your income statement first, then your statement of owner's equity, then your balance sheet. And remember, we're going to subtract the accumulated depreciation from the equipment and the accumulated depreciation from furniture. Don't forget to subtract those amounts. And again, your assets must always equal your liabilities plus owner's equity. Then we're going to do the closing entries again. Same thing, you're going to close the revenue first to the income summary. You're going to close the expenses to the income summary. You're going to close out the net profit or loss in income summary to the capital account, and you're going to close out the withdrawals to the capital account. Then you're going to do your T accounts again because we have updated it with those closing entries. And then you're going to have a post-closing trial balance. Remember, in the post-closing trial balances, you're not going to have revenue, expenses, or withdrawals listed. And again, remember, your debits have to equal your credits. Okay, so this is pretty straightforward. The main thing is everything should be a repeat from previous weeks. The thing that's new is the closing entries. So you want to make sure you understand those closing entries. Go back to the textbook. The entries are pretty much the same every single time. Okay, I think that's it. Good luck with this week's work. If you have any questions, give me a call at 602-639-7378 during my office hours, 12 to 8 p.m., Monday through Friday, Arizona time, or shoot me a question in the individual form or the question to instructor form. Thanks so much.